In this video, you'll learn 10 of my favorite high-yield dividend stocks that today you can buy to generate a stable income. But a little spoiler alert, these aren't the only highest dividend-paying stocks in the market. There are also some of the best stocks that you can buy to generate a regular passive income. Hi, and welcome back to the channel. If you're new here, my name is Rick Orford, and I'm a Wall Street Journal best-selling author, and I've been trading stocks and options since 1999. My work is regularly featured in publications like Yahoo Finance, NASDAQ, Business Insider, and many more. So if they can trust me, so can you. That said, I am not a financial or investment advisor, so everything on this channel is for information only. It's not financial advice. On this channel, I cover stocks, options, and trading strategies. So if you happen to learn something new and want to keep in touch, I invite you to like and subscribe at some point before the end of the video. And if you happen to know someone who might be interested in this content, feel free to share this video with your friends because they'll likely thank you for it. Okay, so first, I'm going to start with showing you how I came up with this list. Then you'll get to see the list of the stocks, and I'll tell you a little bit about the companies and why I like them. I'm going to be using a stock screener, so if you already know how to screen for stocks, then you can go ahead and skip ahead to the first stock, which is Vici Properties. But if you're not sure about stock screeners or why you should use one, I highly recommend you to sit back for a couple of extra minutes because it could really make all the difference when it comes to picking dividend stocks. Okay, so now that that's all out of the way, let's get started. So what makes a dividend stock high yielding? Well, dividend stocks are considered high yield if their annual payout exceeds a common benchmark. And for example, we'll be using the 10-year US Treasury note as a guideline. At the time of the recording, the 10-year US Treasury bonds have an annual yield of around 4.5%. This is also known as the risk-free rate, and it's in line with the typical range of high-yield dividends, which is between 2 and 6%. Now that we have a baseline, how do we look for quality high-yield dividend stocks? Well, one option is to Google high-yield dividend stocks and see what comes up. And then you just have to see which results are the latest and hope for the best. And I say hope because in most cases, we have no idea how the authors came up with the list. That's why for this video, I'm going to pop the hood, right, and uncover the top 10 high-yielding dividend stocks as of today, just like these articles do. However, I'm also going to go the extra mile and show you exactly how I came up with this list and explain why I think these are the best high-yield dividend stocks that you can possibly find today. And if that sounds good to you, stick around to the end as you'll be learning my system for choosing stocks and find out which good ones have the highest yields. And that starts with using one of my favorite financial data websites, barchart.com. Barchart is a leading financial market data and analysis provider, giving traders and investors of all types comprehensive tools to make the best investment decisions according to their preferred strategies. Barchart.com provides real-time and delayed data for stocks and commodities in various markets, including the New York Stock Exchange, NASDAQ, and more. Now, Barchart has many features that can help you trade stocks or even options. By the way, if you want to know more about trading options and what tools to use, including Barchart, check this video up here. So how do you find the best stocks using more than one criteria and then sort them by yield from highest to lowest? Well, to do this, we're going to need to use a stock screener. With a stock screener, you can search from thousands of stocks with just a few easy clicks of the mouse. There are dozens upon dozens of filters, each sorted into different categories, and you can peruse them to see what filters best fit your own screening preference. As you can see, if you click this drop down right here, you'll see all the lists of filters divided by category. You can search for price, fundamentals, and even data based on different technical analysis types like relative strength index, moving average, and so much more. Or to make things easier, we can click on the Add Filter section and type in our preferred filters to get the best high-yield dividend stocks. For this analysis, I use the annual dividend yield. It's a filter because, of course, we'll be looking at the highest dividend yielding stocks. And I type in annual dividend and select it when it appears. And then I click on Add. Now, one thing I want to be clear about, the annual dividend yield on the website is shown in the trailing 12 months, which means it calculates the yield percentage, by taking all of the dividend payouts for the past year and then dividing it by the stock price. And that's it. All you need to do is define your parameters from no yield to very high yield and click to see the results. Or you can type in the benchmark dividend yield, and we could use the 10-year bond rate, 4.5%, and click to see the results. Or maybe you just leave the yields open, click See Results, and then you can arrange the dividend column from highest to lowest with no limitations. And there you have it, the highest yielding dividend stocks today. But yields are only part of the puzzle. Okay, some of you might want the highest yielding stocks, but a high yield isn't necessarily the best attribute to invest. We need to add to that. So let's narrow it down. To do that, aside from adding the annual dividend field filter, I suggest adding 2 more filters to tip the scales in your favor and ensure that you get better results when choosing your dividend stocks. And the first one that I like to add is the current analyst ratings. This is the average rating that analysts give a stock on a scale from 1 to 5. And stocks with consensus average of 4.5 or higher are rated as a strong buy. And that means that analysts see a lot of potential for that specific company. So we'll go ahead and use that and click on strong buy. Now, you might be thinking, if analysts give the company a high score and a strong buy recommendation, that's good enough for me. Well, here's the funny thing about numbers. You have to take it all into context. So you might see a stock with a perfect 5 out of 5 score, but then you look under the hood and you see that only one analyst is covering that specific stock. That's quite a narrow sample size. It'd be like conducting a survey and making a conclusion based on the first person that you meet on the street and then deciding based on that. So to counter that issue, I like adding the number of analysts filter and then setting them from medium to very high so that it selects 8 analysts or more. And that's the way I like to run screeners for the top high yield dividend stocks. So now let's see the results. So here we have the top 10 high yield dividend stocks arranged from lowest to highest based on their forward yield. And we're going to start with Vici Properties. Now, since we're talking about high yield stocks, I expect that there would be at least a few real estate investment trusts in this list. And wouldn't you know it, Vici Properties is the first one on our list. This REIT is a company that owns Caesars Palace, MGM Grand, and the Venetian Resort, three of the biggest and most iconic entertainment properties in Vegas. And I've been lucky enough to have visited them all of them. Vici currently pays out 41.5 cents quarterly, which comes out to a $1.66 forward annual yield. And when I say forward, I mean that that's the dividend amount that you'd expect to receive in the next 12 months. And it translates to a 5.71% forward annual yield based on the stock's current price of $28.91. If you're wondering about Vici's financials, for fiscal 2023, revenue increased 38.9% year over year, while their net income went up by 124.9%. And since it's a REIT, we need to talk about adjusted funds from operations, or AFO, which is the typical indicator for REITs. And it gives us an idea of how capable the company is of paying dividends. For 2023, Vici reported $2.15 in AFO, which increased 11.8% from last year. It's higher than the dividend rate, which is what you want to see. And the company is followed by 21 analysts who rate it a combined average of 4.67. So it's a good stock with good metrics. Next up, we'll be discussing Rio Tinto. Rio Tinto Group is a British-Australian mining company and the second largest mining corporation in the world. However, 2023 wasn't exactly a great year for the company. Revenue, expressed as net cash generated from operating activities, was lower by 6%, and dividends also decreased 12%. However, the CEO promises investors that the company will continue paying attractive dividends and investing in its long-term business strength. In terms of dividend, Rio Tinto pays twice a year as both interim and final dividends, which are subject to the company or subject to change depending on the company's performance. So we'll be using the trailing 12 months, the last 12 months, as the basis for our forward yield. And despite decreasing payouts by 12% last year, the dividend from Rio stock clocked in at $4.35, or a 6.23% yield. Plus, analysts rate this stock or this company a 4.67, which means it's a stock that you might want to look into. Next up, we have Hannon Armstrong. Hannon Armstrong Sustainable Infrastructure Capital, or HASI for short, was previously a REIT that focused on sustainable and green energy projects. However, in January of 2024, the board elected to turn the company into a taxable C Corp. 2023 saw a massive turnaround for HASI, with year-end revenue increasing by 33%. And fittingly, HASI's dividend still proves to be doing well. The company consistently increases its dividend payouts, with the last quarterly payout increasing by 5% to 41.5 cents. HASI's dividend payouts and amounts operate kind of like a Swiss watch, so we can reliably expect a $1.66 forward annual payout that translates to a 6.37% yield. And on top of that, analysts give it a 4.5 average rating. Next up, we have Chord Energy. Chord Energy is an energy company that focuses on exploring and developing crude oil and natural gases. It operates in the Williston Basin, located on the east side of the Rocky Mountains. In 2023, the company reported increased revenue, though the bottom line was ultimately a little lower. Now, Chord is a bit tricky to pin down yield-wise, as the company pays base plus variable dividends. And while I normally wouldn't include variable or special dividends on a top 10 list like this, but this company has paid them consistently since 2022, so there's at least a reason to believe that they'll continue to do so. Chord's latest quarterly payout was $1.25 base and $2 variable, amounting to $3.25 or $13 annually, and this translates to a forward yield of 7.29%. Now, keep in mind that that might change. However, analysts also rate this stock a 4.67 based on 9 firms covering it. Next on the list of high dividend stocks, and we have Enterprise Product Partners. Enterprise Product Partners is a limited partnership and is another energy company that provides midstream services. That's storage, transportation, and distribution of natural gas liquids, crude oil, and other refined oil products. EPD's forward dividend rate in 2024 is $2.06, and that translates to a 7.26% yield. And in other news, the company reported 5% growth in its bottom line in the first quarter of 2024. It also saw modest increases in key metrics that include operating income and cash flow from operations. Also, 17 analysts rate EPD stock a 4.65. Next up, we'll be talking about Civitas Resources. Civitas Resources is another energy company that focuses on crude and natural gas products. It operates from the Permian Basin, and today, well, they're one of the most noteworthy companies that invests in sustainability. It's not something you normally hear from this type of company. Actually, right now, it's the first carbon neutral oil company in Colorado. The company experienced a bit of a dip in 2023 by most financial metrics, and that includes the top and bottom lines, but their CEO, Chris Doyle, remains adamant about returning cash to shareholders. Now, Civitas pays out extra dividends on top of the regular ones during the same payout period. And again, I don't usually include extra dividends on these lists, but since the company has paid them out also since 2022, I'm going to include it. So considering the latest quarterly payout of $1.45, CIVI stock pays an annual dividend of $5.08, which translates to a 7.7% forward yield. What's more, CIVI has a perfect 5-star rating, or a 5 rating, from all 10 analysts covering the stock. And it's the only one with a perfect 5 on the list. And that means that CIVI is not only the highest yielding stock, but it's also the highest rated on this list. Next up, we have another limited partnership called Energy Transfer. As you might have guessed, we have another energy stock on our hands. This time, it's Energy Transfer, another American midstream energy company specializing in natural gas, crude oil, and refined products, pretty much like Enterprise Products. The stock's forward yield is 7.9%. However, unlike Enterprise Product Partners, Energy Transfer's 2023 report ended mostly flat and negative. However, analysts still see potential for ET stock, rating it a 4.8 average based on 15 analyst scores. And here we get into the top 3, and it's Rithm Capital. This is a mortgage real estate investment trust that offers residential mortgages, consumer loans, and commercial real estate loans, and others. The company prides itself on its highly disciplined, opportunistic investment strategy to provide shareholder value. Rithm has been paying 25% per quarter since 2021, which works out to a forward yield of 8.83%, or $1 a year per share. And that's an excellent source of income right there. Additionally, the stock has a 4.5 average score based on 10 analysts. Next up, we have the Blackstone Secured Lending Fund. Blackstone Secured Lending Fund is a business development company, or a BDC. Now, BDCs are like REITs, but instead of investing in real estate or related assets, they invest in businesses. Blackstone Secured Lending Fund, not to be confused with Blackstone Incorporated, has over $9.9 billion in investments in 2023. Let's call it an even $10 billion, right? And here's another thing similar to BDCs and REITs. They tend to pay good dividends. This fund has a forward $3.08 dividend, which translates to a 9.47% yield. And that's a great value proposition considering that 10 analysts rate the stock a 4.5. And so here we are, we arrive at the #1 spot. If you like what you've seen so far, don't forget to hit that like and subscribe button and share the video with your friends if you think it's worth it. Now, without further ado, my top highest yielding dividend stock as of May 2024 is Trinity Capital. Trinity is also a BDC that provides venture debt and equipment financing to different growing companies. Based on Trinity's first quarter report, the company is doing well. Total investment income increased by a record 21.5% year over year, and the bottom line increased by a massive 30.1% in the same period. And now let's talk about their dividend. With a $2.04 forward annual rate, TRIN stock pays out an exceptional 13.76% dividend yield. And that, my friends, is only considering its regular quarterly payouts. Actually, Trinity Capital has paid special dividends 5 times in the last 2 years alone. So we could conceivably be looking at more than 13% this year if things continue to go well for their company. And by all indications, things to be appearing going very well at Trinity Capital. Finally, TRIN stock has a 4.5 average rating based on 8 analysts, marking it a strong buy. And there we have it, my top 10 high-yield dividend stocks that you can buy today. As you can see, I like to use tools like bar chart to make my trading a lot easier and get better results through data. Thank you so much for watching. Stay safe, don't gamble on investments, and feel free to leave a comment below, and I'll see you in the next video. Bye.